You notice a brown stain spreading across your living room ceiling. Upstairs, there's a slow drip coming from behind the wall in the bathroom. Your first instinct is to pick up the phone and call your insurance company. Don't do that just yet. I'm not saying don't ever file a claim. Insurance exists for a reason. But one of the most common calls we get at our agency is someone who noticed some water damage and wants to know if they should file a claim before they even know what the repair is going to cost. And the answer might surprise you, because sometimes the smartest thing you can do is put the phone down and call a plumber instead. My name is Jim Eddington. I run Western Pacific Insurance. We're an independent agency. We write home, auto, and business insurance across multiple states. And today we're going to walk through what actually happens to your rate after you file a claim on your home, on your car, and on your business. And more importantly, when you probably shouldn't file one at all. Let's go back to that ceiling stain. You call a plumber, they find the leak, and the repair estimate comes in at $3,000. Your homeowner's deductible is $2,500. That means your insurance would only pay out $500, but it sounds like free money, right? Here's what happens next. That claim goes on your record. Your rate goes up at renewal, and a water damage claim can push your premium up materially. The increase varies by carrier and by state, but it can be significant, and it can last for years. Most carriers apply that surcharge for 3 to 5 years. So even if the increase is a few $100s a year, you could easily end up paying more in extra premium over that window than the $500 your insurance actually paid out. The math doesn't work. Now change the numbers. Same leak, but it's been going on for a while and there's damage to the subfloor, the drywall, and the ceiling below. The estimate comes in at $50,000. That's a different conversation, and that's what insurance is for. The rule of thumb we tell people is simple. Get the repair estimate first. Know what you're dealing with. Then compare the payout after your deductible against what the rate increase could cost you over the next 3 to 5 years. If the payout is small, you might be better off paying out of pocket and keeping your record clean. The same idea applies to your car. You're backing out of a spot at the grocery store and you clip a post. Nobody else is involved, no police report, just a dent and some scraped paint on your bumper. The body shop says $1,800. If your collision deductible is $1,000, your insurance would cover $800. But here's the problem. An at-fault accident can raise your premium substantially, sometimes by a lot, depending on the carrier, the state, and your prior record. And that surcharge typically sticks around for 3 to 5 years. So you'd collect $800 and potentially pay for more than that in increased premiums over the next few years. Again, the math matters. If the damage is cosmetic and the repair is anywhere near your deductible, think twice. Save the claim for when it counts. A serious collision, a totaled vehicle, an accident with injuries, that's when you need your insurance working for you. Here's something a lot of people don't realize. Claims history often follows you even if you switch carriers, because new carriers usually review prior loss history when they quote. For personal lines, your home and your car, there's a database called CLUE, which stands for Comprehensive Loss Underwriting Exchange. It's run by LexisNexis, and it keeps up to 7 years of your claims history. When you apply for a new policy or get a quote, carriers often review your prior loss history, including your CLUE report for personal lines. They can often see prior claims, what was paid, and in some cases, claims that were open but paid little or nothing, depending on how they were reported. That's right, if you called your carrier, they opened a claim, and then you decided not to pursue it, in some cases, that claim can still show up in your history depending on how it was reported. Think of it like a credit report, but for insurance. And just like a credit report, you're entitled to a free copy once a year. I'd encourage you to pull yours. You might find something on there you didn't expect. On the commercial side, if you own a business, the equivalent is called a loss run report. When we quote commercial insurance, the carrier will ask for 3 to 5 years of loss history from your current or prior insurer. Every claim is listed, the date, the type of loss, the amount paid, and whether it's opened or closed. And if you've switched carriers during that window, you need loss runs from each one. The point is, carriers have long memories. A claim you filed 3 years ago is still influencing what you pay today. And when you go to shop your insurance, every new carrier you talk to is going to see that same history. Every time we get a windstorm here in the desert, the phones light up. And when it rains hard, especially after a long dry stretch, even more so. It's understandable. You hear the wind howling, you see a shingle in the yard, and your neighbor tells you they already filed a claim. But here's what I'd tell you. Don't file a claim because your neighbor did. Get your roof inspected by a licensed contractor first. Find out what you're actually dealing with. If it's a couple of missing shingles and the repair is under your deductible, you already know the answer. And I want to mention something about the fraud side of this because it ties in. After every major storm, roofing companies show up from out of state, they knock on doors and offer to work with your insurance company to get you a new roof. Some of them will even offer to cover your deductible, which sounds great, except in many states, offering to waive or rebate your deductible can create serious legal and fraud issues. That's a major red flag. Carriers are not naive about this. They increasingly use aerial imagery, drones, and AI-assisted tools to compare roof condition before and after a reported loss. If a claim doesn't match the evidence, it gets flagged. And if it gets flagged, the claim could be denied and it could create serious underwriting problems for you going forward. I'm not saying legitimate storm damage doesn't happen. It absolutely does, and that's exactly when you should file, but make sure the damage is real, the repair exceeds your deductible by a meaningful amount, and you're working with a reputable local contractor. If you own a business, everything just said applies, but the stakes are higher because the numbers are bigger and the scrutiny is tighter. Say one of your employees backs a company vehicle into a client's building while making a delivery. The damage to the building is minor, a cracked door frame, some cosmetic damage to the exterior wall. The estimate comes in at $4,000. Your commercial auto deductible is $2,500. Before you file, think about it the same way. The payout is $1,500. But now that claim is on your loss run. And when your policy comes up for renewal, or when we try to move you to a better carrier, every underwriter who looks at your account is going to see it. For commercial lines, underwriters care a lot about frequency. One large claim might be viewed as an isolated event, but multiple smaller claims, even if the total dollar amount is modest, signal a pattern, and that's what makes underwriters nervous. They start asking questions about your operations, your hiring processes, your safety protocols. We help businesses with their insurance needs all the time, and one of the most valuable conversations we have is the one where a business owner calls us before they file, because sometimes the best move is to handle it internally. Tighten up your procedures and keep that loss run clean. Here's the bottom line. Insurance is there for the big stuff. The fire, the totaled car, the lawsuit, the $50,000 water damage claim. It's not designed to be used for every minor repair and fender bender that comes along. Before you file any claim, home, auto, or business, here's what I'd recommend. First, assess the damage. Get a professional estimate from a licensed contractor or a body shop. Don't guess. Second, know your deductible. If the repair is close to or under your deductible, you already have your answer. Third, do the math over 3 to 5 years. Compare what your insurance would pay out against the potential premium increase over the surcharge period. And fourth, call your agent. That's what we're here for. A good agent will walk you through the decision and give you honest advice about whether filing makes sense. If you want help with your home, auto, or business insurance, or you just want someone who will give you a straight answer, there's a link below where you can reach us. Thanks for watching.